All right, let's do this, everybody. Welcome back to course number 2, lesson number 8. We're going to talk about intermediate Elliott wave theory. We're going to review a little bit of lesson number 7 and introduce some more concepts as well. All right, hope you guys have had a really good time so far. Have you guys noticed in this course so far? 0 jokes have really been made. Maybe 1 or 2 by accident, but I'm taking your education seriously because I really do want to see you guys thrive. If you guys are looking for support, consider signing up. It's $200. It's going to provide you guys with 4 months of support from November the 2nd to February the 28th. And the reason I'm doing this is because I am limiting it to only 1,000 people that I will support wholeheartedly for the next 4 months. I do not plan to do anything except for sit in my apartment and reply to you guys. So it comes down to about $50 a month for you guys to ask me whatever you guys want for 4 months for course number 1 and 2. Pretty good support, I'd say. What do you guys think? Let me know your thoughts. All right, guys, let's get into this. And don't forget, guys, lesson number 8 is going to be fairly advanced, in my opinion, intermediate to advanced theory, and we're going to fly through this. The first course, lesson number 7 was about 1 hour and 15 long, and we're going to introduce tons of concepts. Here, we're going to introduce even more concepts in lesson number 11, where we will be incorporating EWT, Elliott wave theory, into my scalping strategy on a small time frame. We're going to introduce even more for lesson number 12, and in lesson number 14, guys, 20 live trades, 6 hours long, at least half of them deal with Elliott wave theory. The best part of this particular course, guys, is the live trades. You have to think of it as repetition, okay? Think of it as repetition. Now, some of this might be skimming over a little bit of course number 1, but we are refining you guys, okay? You know the process. You need to hear it over and over again until it becomes routine, until it becomes subconsciously innate in you, okay? You have to make sure that this stuff becomes very natural. As you guys have seen before, let me have a sip of this, please. As you guys have seen, I can trade pretty much in any condition, as you guys have seen before. Doesn't matter if I'm sleepy, doesn't matter if I'm drunk. I can trade subconsciously. It thinks for me. And I need you guys to get into this type of mentality as well. Don't get me wrong. I'm not saying to trade when you're sleep deprived, when you're uninhibited, right? Always trade when you're 100% level-headed, but I'm just more so making a joke that these skills are always going to be here to stay with me, as you guys have seen from my profits. I mean, if we just go back to my, Twitter randomly, right? Just, I'm recording a lot of these videos over again. I mean, the last day that I traded, what did I make? Let's see my last profit. Oh, I made $750 yesterday on October the 31st, guys. And that's like a typical day for me usually on a 10K account. If you guys go back all the way to, my live trades, let's just go there for example, okay? I just want to inspire you guys as well. Okay, my live trading videos, guys, there's a lot of them. Sometimes I'm making $200 in 20 minutes, right? Sometimes I'm making, there's my 20K to 25K challenge. That was 4 months ago only. Guys, that was only 4 months ago. Made $5,000 there. That was pretty good, don't you think? I'd say that's pretty good every 4 days. For example, on May 30th, there's so many videos. Let's just go take a look at them for fun. All right. I've got a lot of trades under my belt, guys. Tons of trades. These are, I haven't really uploaded too many, but a month ago, they're not really in order either. Let's just go to my actual videos here. I just want to show you guys proof in the pudding as well, all right? So for example, in September, I started, November, October, I started this challenge. A month ago, $730 up, $1,000 Canadian, easy position. Day before that, 550 for the day, right? I'm making some pretty big plays here. There you go. And 1 month ago, I finished off at 5,100 American dollars, right? $6,600 in 1 day of trading. Now that is insane if you guys think about that, right? Here's my last trade just as an example to show you guys when I'm playing on these bigger accounts, right? And you guys have seen it. I'm usually playing with huge accounts. I'm usually playing with $200,000 margin accounts, but I've earned that right to get there, right? I've earned the privilege. And always remember that position size is not a privilege of wealth. It is a privilege of obtaining the skills to get there, right? So some days I'm making way more than that. For example, this day I'm making $1,800. I'm making 2,500 Canadian dollars in literally 24 hours. You know, a month ago before that, I'm up $2,800 some days. I'm up $1,500 some days. I'm up $1,000 some days. I'm up $1,400 some days. $2,400 one day. This one right here was pretty awesome 2 months ago, right? Live trading. You guys have all seen my awesome office where I used to trade at home, right? Pretty cool office. You guys must miss it. I am just trying to inspire you guys to let you guys know that when I trade, it means business, okay? And this was an awesome trade. I actually remember this one very clearly. Managing multiple positions at once here. These were nice. There you go. This one ended up being a $2,000 profit. So be inspired, guys. If you guys want even more material, go take a look at my live trades. If you guys want more proof in the pudding of what I can do, definitely go check out YouTube as well. So let's do this, guys. Let's talk about Elliot Wave, and let's talk about how I specifically use Elliot Wave to kill it in the market, okay? I have to be very firm about something. I will explain to you guys failures in Elliot Wave structures, but I'm not going to go into it in high detail because the focus of this goal is not to make you guys the best Elliot Wave traders in the world and know the theory down 1000%, okay? The goal of this course is to let you guys know what I do because you have to use other people as a reference, okay? You use other people as a reference. You try to learn as much as you can from them. Maybe you want to mimic them if you have a style, if you have a personality that is very much so similar to their trading style. And always remember that our trading style is eventually molded to our personality, right? You will learn so much about yourself. You will learn about what kind of person you actually are. Okay, while we're here, guys, I'm just going to buy a little bit more. I'm in a long position right now for Ethereum Classic. Today's date is November the 1st, and I'm doing my very last edit for the last video here before I upload everything. I'm already in the process of uploading everything, but just to let you guys know, my goal right here is to just completely destroy this target here and go for about $9.38. I plan to make about, I'm guessing $800, maybe more, maybe less, maybe $600 to $1,000 on this Ethereum Classic position, just to give you guys an idea of how confident I actually am, okay? So let's do this. We talked about 5 wave structures, okay? Now I want to be very clear about something as well. We're going to introduce some more terminology. We talked about how we generally treat wave 4 as a support region, right? It's a support region because wave 1 was previously a resistance. And because wave 1 was a resistance, okay, wave 4 will tend to bounce off of it, but always know that waves can fail. And also know that wave 5 does not always exceed wave 3, okay? So let's say we had a normal wave 3, most of the time wave 5 will exceed it, but if all of a sudden wave 3 becomes incredibly elongated is the word that they use, where it moves up so high and so fast with so much ferocity, okay? Bam, huge wave 3. A lot of the times, the wave 5 will do one of 2 things that we call it, okay? One is a double top, that you guys have heard of the term, where it simply does not and cannot surpass the resistance of wave 3. Make sense? You guys have all heard of double tops. The next one is called a truncated top, right? Where it does not actually get to even close. We're very close, but not too close. Okay, I'm gonna write it down. It's called a truncated 5th wave. Okay, truncated 5th wave. It cannot get close, or it cannot exceed, and barely gets close to the 3rd wave. Okay, and this occurs, I'm just going to write this, occurs when the third wave moves with incredible impulse. Make sense? Because the third wave moves with such high ferocity, or whatever word you would like to use to describe it, with incredible impulse, it moves up really fast with lots of volatility. The fifth wave cannot exceed, and it barely gets close to the third wave. This is what we call a truncated fifth wave, okay? Now let's also explain some more terminology on the downside as well, all right? So let's say we have a zigzag that goes something like this, all right? That goes something like that. And this is now the ABC structure that I will draw in here. A, B, C. Okay? Now sometimes the C wave can also be truncated, all right? It can also be truncated as well. We get the typical ABC here. I'm not going to bother annotating it correctly. So let's say that this ends up becoming like this. This is now a double bottom, right guys? Right, this is a double bottom where it's pretty much bottoming out exactly where it is, meeting the A wave. Let's actually draw this a little bit better and get this on a minor wave and make sure that you guys are seeing the proper annotation here. Okay, so this is the A, right? We're getting the B, you know, right here. Let's take out the wave so you guys can see clearly. There you go. There's the B, right? Makes sense now. Let's get the C out here for you guys to see it as well. There you go. Do you see this now? Where this makes the A, the B, and the C, right? This is still a 5-3-5 structure. Now this is what you call a double bottom. Simple as that. But sometimes, okay, sometimes the wave 3 or A ends up moving down so hard, okay? It ends up moving down so hard with such, whatever the word, with volatility, the word you can use, that wave C doesn't really do anything that much, okay? It doesn't really do anything that much at all. So it ends up falling short of even A because, or sorry, yeah, it falls short of A because C, or sorry, it falls short of A because A falls down too hard and too fast with too much volatility and too big of a percentage move down. So if that happens, C can also be truncated. Now, any of these waves can be truncated when it comes to the C wave or the fifth wave. In fact, if there's an ABC here as well, right? And the C doesn't always have to move above A. It can be a double top like that, or it can even be truncated again. So basically the word truncated simply refers to falling short of the previous wave. Now double top is very different because double top comes very, very close to it, right? Which creates a double resistance. A truncated top ends up falling slightly below it. And that's very important to completely understand. Okay, so now let's talk about how a lot of these rules tie in together. So once again, we say that the wave 4 cannot retrace into the wave 1 territory by more than a wick on a high time frame, okay? In a highly leveraged market. If you guys would like to see proof, I'm going to show you guys. Okay, I'm going to show you guys right here. Elliot wave PDF. Where is it here again? Whoops. There you go. I'm going to show you guys proof in the pudding. All right, just to make sure you guys understand this as well. Right here, okay? And in an impulse, wave 4 does not enter the territory of wave 1. This rule holds for all non-leveraged markets, okay? And you guys know how BitMEX can be extremely leveraged. Now another concept I want to introduce to you guys is this right here. A diagonal triangle, okay? Or a leading diagonal right here, okay? I want to explain to you guys what this is. There's ending diagonals and there's also leading diagonals as well, okay? Now let me show you guys right here. There are two types of motive waves, impulses and diagonal triangles, okay? Now I'm going to talk about overlapping over here. Let me find it for you right here first. Right here, you guys need to be very clear because a lot of people think that sometimes waves cannot overlap. Now this is a very basic part of Elliott wave, but this rule is very important for me, okay? A diagonal triangle is a motive pattern, but not an impulse, and it has two corrective characteristics. Diagonal triangles substitute for impulses at specific locations in the wave structure. As with impulses, no reactionary subwave fully retraces the preceding actionary wave, and the third wave is never the shortest. However, diagonal triangles are the only 5-wave structures in the direction of the main trend in which wave 4 almost always moves into the territory of wave 1. Okay? Does that make sense, guys? Now let's talk about what that means. What that means is that the people who think that wave 4 cannot retrace into wave 1 territory, you clearly never even got past page 17 of this book. Because if you did get past page 17 of this book, it clearly states it right here that there's a very high chance of leading diagonals and ending diagonals occurring where the wave 4 will actually overlap into the wave 1 territory. So I just want to hold that corollary to be true, okay? And we need to make sure we understand this, okay? And right here, a very small percentage of ending diagonals appear in the C wave of a position, right? Ending diagonals are primarily found in the 5th wave, whereas leading diagonals are found in the 1st wave and also the A wave structure as well. So just as an example, this figure right here is an ending 5th wave diagonal. Notice how it goes like that. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, right? That usually comes in the case of perhaps a 3, 3, 3, 3, okay? I'm going to talk to you guys about it as well. Notice right here, I'm going to show you guys diagonal. Okay, I'm going to go down here, right here, okay? An ending diagonal is a wedge-shaped pattern containing overlap that only occurs in the 5th wave or the C wave, and it subdivides 3, 3, 3, 3, 3. Whereas a leading diagonal divides still 5, 3, 5, 3, 5. Now these two are by far the most profitable coins or profitable patterns to play. And I personally keep just a few set of criteria to enter a trade, and these are definitely one of them, guys. I love ending diagonals. I love leading first wave diagonals. Once again, these two books are the books that I highly recommend. This Elliott Wave Theory book right here, you guys can just type in Elliott Wave PDF Robert, and the first link comes up here. It's free to download. It's a PDF, but it's the condensed version. I highly recommend to get these two books right here. Elliott Wave book. The two best books, in my opinion, that I've read is this one right here, Elliott Wave Principle, Key to Market Behavior, okay, by Frost and Pretcher, and also the Elliott Wave Trading Visual Guide. This one's a fairly newer one in 2013. I read it about 3 years ago. Actually, sorry, 2 years ago. Very interesting book that I highly recommend that you guys pick up. So anyways, let's talk more about this right here. I just want to make sure that my position here is good. So once again, I'm actually longing Ethereum Classic, where I plan to make a killer profit on it very, very soon, okay? I think it's going to be a very nice profit here. Our size getting kind of high, but that's okay. Don't mind that at all in the least, okay? Okay, anyways, let's get back to here. So what were we talking about? We were talking about how the wave 4, okay, is often, right? Actually, let's do this first of all. Let's go back a little bit. Whoops, I removed all my drawing indicators by accident. I don't want to do that, guys. Let me load it up here again. That's okay. Make sure you guys always save your charts, because sometimes you end up deleting all of your indicators. And on my keyboard, unfortunately, Control Z does not work on my laptop for some reason. I don't know why. So I always make sure that I keep multiple charts just in case I delete something by accident, as you guys should as always, okay? All right, so now let's go to any random chart here and let's talk about this right here. So what happens after an ABC impulse wave upwards? What happens is it attempts to, it corrects first of all, right? It corrects, as you guys know, okay? We get, for example, an ABC correction, okay? And what I generally like to do is, depending on where wave 4 ends up, right? It really depends on where it ends up, but I always try to target buying into right here. That is how I do it for Elliott wave. I try to buy it near the wave 4 territory. That is for a long position, even on a short time frame that we're going to get into as well. Try to buy it near the wave 1 and the wave 4 territory, and make sure that you guys are understanding that the risk to reward is slightly below the 1 ratio, right? And also, sorry, the 1 territory and the 4 territory. So usually what happens, okay, is this. You guys should absolutely 100% make note of the 5th wave territory right there. After you make note of that 5th wave territory right there, which is really the first impulse wave when you think about it like that, okay, you would want to go long, obviously. And the next thing that you'd want to do is, of course, you take your trend-based fib extension, right? Trend-based fib extension, and you target at least a 1-to-1. Higher than that, preferably, anywhere between 1-to-1 and 1.618. But guys, as you are surpassing specific points, make sure that you're taking profit. Absolutely, take profit some there, because it's just breaching here. You don't know if it's going to double top, right? And then if it does break out of there after taking profit, add some more to your position. Try to take profit in the 1-to-1 area as well. But not every time it will actually break out to this specific region. No guys, not every single time. A lot of the times what will actually happen, okay, is that it will fail. Okay, it will fail. Simple as that. Because not every single wave ends up breaking out free. In fact, it will try, and the way that we denote failure is just like this right here, right? We say that wave 4 retraces too much into wave 1 territory, right? Or, for example, okay, ABC, right, ends up retracing too much. Because if you think about it, this is indeed wave 1 going upwards, right? Just like that. And that is wave 2 as well, okay? And because it retraces with the golden rule, guys, the cardinal rule of this is that it cannot retrace by more than 100%. If this is wave 1 and that is wave 2, this cannot retrace by more than 100% of wave 1. Otherwise, it fails, right? So let's just say that it didn't fail for now, and that it ended up retracing to about right to that region, okay? And then it ends up making this right here. Now let's get a little bit closer. Now let's say that we get an impulse wave going upwards like that, right? Where this will make the first wave only. 1, 2, 3, 4, and 5. Just like that, okay? And normally, we would want it to be something like this, okay? We'd want it to be something like, 1, 2, 3 that breaks out of it, 4, and 5, wherever that one might be, right? Somewhere higher. But along this structure, it can fail anywhere. For example, if wave 2 right here ends up retracing by more than 100% of wave 1, this will automatically be a failed wave, okay? If, for example, at least one main wave will usually finish, though, from my experience and what I've seen. I don't focus too much on, these are called WXY corrections that I will be talking about in here, okay? And you guys are absolutely welcome to backtest this as much as you'd like. And keep in mind, guys, join the support group. It's $200. If you guys find any chart that you would like to talk about, I will gladly give you my opinion. And that is what the support group is for 4 months from December the 2nd till February the 28th. It's so you guys can walk out of this course feeling like you got your value's worth and you actually have the support to help you thrive and excel in this setting. Because guys, I'm telling you right now that the bull market's going to be back here. Maybe not this year, maybe not early next year, but when it's back here, you don't want to be that guy that doesn't really know what he's doing. Nah, you want to be prepared. You're training, guys, for the Olympics. That's 3 years from now. You guys have to think of yourselves as an athlete who's mentally conditioning yourself and practicing your skills and honing your skills so you can be prepared when this bull market does come. Because if you're not prepared, you're going to be wishing that you absolutely did, guys. All right, so if wave 4 retraces to the wave 1 territory by too much, that's a fail. If it retraces into, near wave 2 territory, that's a fail. If it retraces to the wave 1 territory where it began, that's a fail. But usually that doesn't happen. Usually at least one wave will finish, okay? And then this one here, if it retraces to below where the wave 1 began, bam! That's now a failed Elliott wave. It's now a failed impulse wave is what we call it, okay? That is exactly what we would call it right here. So this one right here would be most likely considered the grand scale right there, okay? This one right here is the second one. We'll just call it, any degree, just for fun. And now this one, if it actually succeeded, okay, if this actually succeeded, then we would call this a third wave, going up there, a fourth wave there, and a fifth wave there. And then this one would actually be making the third wave going upwards, right? The third wave like that going upwards. Check it out. Makes sense? And then it would have been a proper wave. But because it didn't do that, and it failed along the way instead, because one of these waves, for example, this one here, ended up retracing below the wave, the first impulse wave up, right? What we denote this as is X, okay? And X. This is for a zigzag, keep in mind, a zigzag 535, okay? That's really important to know. Now that this is X denoting failure, what we are going to see now is an extended ABC correction, where we will get a double ABC correction, also called a zigzag. Right here, you guys see on the left-hand side, it's called Elliot WXY double wave combo, okay? And then now this will be like that. We will get an additional one down there, okay? And this one will actually grant us again, it will be like an ABC, just as an example, okay? We're gonna get 1, 2, 3, 4, and 5, and then we get the the 5 waves in the C as well. And if I'll show you guys how to write it, okay? So now the way that this ends up working is like this. Let me show you. So the way that we draw it is simple and like this. We click on this one, okay? This is the first point right there. Oh, sorry, that's not the first point. You click on where 1 is, and then here, and then there, and then here, okay? So it goes like that. Let's get this to a bigger degree here. Like this, all right? I just happened to write that one very big because I just want it to be very visible. Maybe I should just make it a little bit bigger. Don't worry about the degree. It's just so you guys know. Some of that, sure, that one's good, just to have it the same size. So you start it where the end of the first wave was over here, right? And then you draw, so you click on here first, and then you click on where the C is right here, okay? That is where the C is right over there. Makes sense? So this would be the W, okay? This would be the W right here. That would be the X for failure, and then the Y. And in between the Y, you get a double structure like this. So let's say that this was the X in here, okay? Or sorry, this was the X right there, and this is the Y, okay? You get a double Elliot, you get an ABC in here, right? You get an ABC in there. Make sense? Okay. Now, let's talk about more double failures. Okay, let's talk about a triple failure now. Now, every time, guys, every single time it actually does this, okay, we're going to talk more about this right here. Let's say that this right here ended up making another attempt for an impulse wave up, and then it actually fails, okay? It fails again because it retraces lower. Well, now what you're going to get is another X, but the way that we call this one is called the Elliot triple combo wave, WXY XZ. Okay, so you start here, that's the first one. This is your W, That's your first X, that's where your second Y is, that's where your X is, and that's where your Z is right here. Have you guys noticed how second nature this is to me? It's because I've done this so many times, guys. I've done this so many times, I kid you not, back in my days, and I realized that it was very good and handy to learn all this, but at the same time, it's almost unnecessary a lot of the times as well, because you don't need it to be an extremely good trader. This is more so introducing you guys to concepts, okay? And now, what you get is this, right? There you go. So for a normal 1 to 2, you get yourself a 1, 2, 3, 4, 5, 6, 7, 8 wave structure, right? You get an 8 wave structure, but then now you're getting way more simply because, and they're all Fibonacci numbers as well. So this is traditionally what you would see, right? You would see 1, 2, 3, 4, 5, which makes 1, 2, and then what you would see is this right here. You would see an impulse attempt going up, and then it fails at the X structure. Right there, okay? Fails at the X structure because it retraces by more than 100% at some specific wave. So for a zigzag, you actually end up getting another A, B, and C coming down. It attempts to make it a break again for an impulse wave, and then it simply just cannot do it. So then you get an extended correction again. These happen much, much more often than we actually think in the market. Unfortunately, it really, really does. Now, let's go over some other theories as well, okay? Let's go over A, B, C, D, E type of structures right here. Lots of coins are actually going up right now, if you guys have noticed, okay? Ripple is actually doing pretty well here. Yeah, Ripple is doing very well. It's going, actually not only at 1% up, what coins are skyrocketing right now? I don't quite understand. Let's take a look at this right here, okay? We see Ethereum. Is it actually making a move right here? Or is it just a tiny, tiny little move? Is it worth 5% of my volatility requirement? Nope. Any coin? No coins right now are actually moving up even much whatsoever. Bitcoin Cash is not. No coins are actually worth my time right now to trade despite my RSI alerts going up, or going off rather. All right. Now let's talk about these other ones right here, and I'm going to give you an example for each one, okay? So you have a leading first wave diagonal, right? And then you're also going to have, for example, an ending fifth wave diagonal. Leading first wave diagonals are often found in the first impulse wave going up, or they are found in the A position coming down, right? And the A position coming down has 5 waves as well. So yes, you can find it in the first wave coming down. So the best way to describe a leading first wave diagonal, I love to short them, by the way, just so you guys know, okay? Especially when they actually move with a lot of volume and high volatility. So the way that I look at it, and don't forget that they can retrace, is like this. I call this a rising bearish wedge. Okay, a rising bearish wedge. This is a leading first wave diagonal, and this one here is going to be an ending fifth wave diagonal. Notice how, for example, this one could actually overlap the wave 4. Notice how wave 1 is often the strongest for a leading first wave diagonal, and then it comes down, and then the 3 goes up there, and the 4 could even overlap, and the 5th one, and then after that, sometimes it ends up throwing over just a little bit, right? Because the bulls want to actually trap the bears, right? Or sorry, the bears want to trap the bulls, and then it breaks down. That is very common. And then if you see it in the 5th wave, usually in the 5th wave, it is broken down by subwaves of 3s, okay? It'll go something like this. 1, 2, 3, 4, just as an example that I'll give you guys right here, okay? So it's gonna look just like this. Check this out, right? Something like that. So we get 1, 2, 3, 4, 5. But to be very, very clear as well, these ones are usually broken down into 3s, okay? 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and then small as well. And the last one also has 3 going upwards, right? And then it reaches this wedge where it ends up wanting to really break down out of it, okay? So this is a leading first wave diagonal that has a 5, 5. This one has 5 as well. And then wave 2 and wave 4 have a 3-wave structure, okay? So I hope that makes sense, and I'm going to give you guys real life examples as well, of course. You can only learn, guys, by seeing the proof in the actual pudding, right? So is this actually spiking right now? Is it worth our time? Is it actually doing anything? Not really right now, actually. Not really at all, in my opinion. Can we short it to make some gains? Nah, not enough volatility. Keep in mind, I always have a 5% volatility requirement in the past 20 minutes to make a trade. Are my positions filling up here? Nope, they're not filling up whatsoever. Let's actually increase the price just a little bit here because I do want to get into a decent position for Ethereum Classic. All right, now let's talk about it from the perspective of ABCs, okay, in these zigzags. So we can get a leading first wave diagonal in the A position, right? Where that happens quite often, a leading first wave diagonal in the A position where it breaks out. And we can also get it in this position as well. The ending diagonals in the C position, that those are really profitable ones to play as well, right? Where it goes something like that. And this one here is going to be in the formation of a 5, 3, 5, 3 pattern where wave 1 has 5, wave 2 has 3, wave 3 has 5, wave 4 has 3, and wave 5 has 5, okay? But in this one here, yeah, it'll be a 1, 2, 3, 4, 5 wave formation as well. But each one is going to subdivide into 3s. And that's a very important distinguishment to actually make. And if you guys ever see tightening up like this in this formation, as it gets squeezed in there, go long. This right here is called a bullish rising wedge. And that is a bearish rising wedge. And it's a very bearish pattern, okay? I'm gonna actually buy this right here because I wanna go long on it. Simple as that. So I'm now in a $14,000 position for Ethereum Classic. So now this is once again a rising bearish wedge. If you guys ever see formations like that, right, where it goes 1, 2, 3, 4, 5, it is bearish, and once it gets squeezed to the top, it will absolutely break down. If you guys see formations like this, 1, 2, 3, 4, 5, this is very bullish. Okay, when it gets squeezed down over here, it's actually going to break out of it and it's going to be move some pretty good distance. So anyways, that is what we're going to talk about here. We're talking about WXYZ corrections, failures. We're talking about, actually we got to get into ABCDE triangles as well, right? You guys have seen a lot of these as well. Okay, so let's say you have an impulse wave going up. You got an impulse wave going up like that, okay? And it doesn't exactly make, right? An ABCDE pattern will generally consist of 3, 3, 3, 3, 3. So here's ABCDE like that in here, okay? And you can actually see that quite often in flag formations. You can actually see it, for example, in an ascending triangle, right? An ascending triangle that you guys have seen before, where it's doing some sort of A, B, C, D, E, right? A, B, C, D, and E, and then it breaks out. That happens quite often, right? So it makes 1, 2, 3, 4, 5 touches, and then it breaks out of it. And then another very common one is, of course, the ones like here, okay? Where it's going like that, where it's a symmetric triangle, where it breaks down in 3s. So what is the difference between an ABCDE and also a structure that's a falling bullish wedge? Well, a falling bullish wedge is only found in the A structure, right? Or the C structure, or the 5th wave. But if it is making a subdivision here, where it's just gonna go ABC, like that, ABC, A, B, C, A, B, C, and A, B, C to subdivide 3, 3, 3, 3, and 3, that is what you call an ABCDE. Make sense, guys? So you see these patterns all the time, right? And you see it perhaps even in a flag consolidation sometimes where it gets a little bit tighter in the range. Okay, let me give you guys a very clear example of an Elliott wave failed structure, okay? EOS actually failed pretty miserably, I'd say. Now, this would be the first impulse wave up, going right here. 1, 2, and 3, 4, and 5. Now, a lot of people might have thought that this right here was the third wave, right? Because it did meet a 1-to-1, just as an example, right? But you constantly have to check it, okay? You constantly have to check it. So let's say we took this one to here, and then we did that, right? We say to ourselves, all right, well, this could be the first wave, that could be the second wave, that could be the third subwave as well, that could be the fourth, and that can be the fifth. So the way that I always do this is I wouldn't have drawn it like that because I obviously wouldn't have known, right? I remember trading this actually, and I'll tell you guys exactly how I did it. So the way that I did it was I was waiting for this structure to finish, okay? I was waiting for this structure to finish, and I identified two resistances. One resistance there, and one resistance there. As soon as it broke this one from March 18, because that was a long time, right? I ended up adding some to my position right around here. If you actually, you guys might even, I might even call that with you guys as well. Added some to my position here. And there as well. Okay? Because this is the second one where it broke out. Now, because that actually broke out like that, I would automatically say to myself, okay, guys, that right there is going to be the third impulse wave, right? Or the first wave up like that, okay? First wave. Or it could have been perceived as the other way as well, where this was a really extended, huge fifth wave, which is possible, right? Or this one could have just really retraced next to nothing at all, where it was so bullish, excuse me, that it only retraced 236. So I would have actually drawn it like this ahead of time. 1, 2, right? Something like that. That's where the first structure is, okay? 3, and that would have been 4, and I would have shorted it right there on the fifth wave. Just on the fifth wave alone, I would have absolutely shorted it, okay? How much would I have targeted? I would have targeted always 382, which we're going to go over into high detail in the next course or the next lesson. I always target a simple 382 right there, which yields security and safety, right? And if I am wrong for some reason, and that actually was 1, 2, 3, 4, and 5, I would have been very safe still. So I would have drawn it like here, but as we notice, it still breaks out a lot, right? I would have drawn it something like that and still breaks out quite a bit, as you guys see right there, but we would have shorted and been very safe. But what we actually see instead is that we take our resistance, right? Because we're not in a position. We look here, we say, oh wow, it's actually an ascending triangle. So it means that there must be some other wave up just by deduction. So that must mean that this is most likely the first wave down. That's the second one, the third one's there, and there's a fifth wave there, right? So it makes 1, 2, 3, 4, 5. Because every time it breaks out, we assume that it is a new impulse wave. So originally we would have thought that this was 1, 2, 3, 4, and 5. But now what we want to say is that this is now because it's 1, 2, right, and 3, 4, and because it broke out to one more up, we gotta assume that the first 1, 2, 3, and 4 is actually subwaves for wave 5. Make sense? Okay, now that we've assumed that, then we also gotta assume that, hey, this is now like that, right? And now we're also going to assume that this is now one big wave, one coming down, and bam, we now officially have our 5 waves going upwards, right? So the impulse wave completes, in my personal opinion, with a very bullish retracement. But do you guys know why it fails? Okay, it simply fails because, let me show you. Actually, has it failed yet? No, it actually hasn't really failed yet. Surprising. Okay, so I still see this as 1, 2, 3, 4, and 5 then, right now. And this is quite the major downtrend with a sideways movement right over here. My mistake. I was going to show you guys a failed wave, but this one actually has not failed yet whatsoever. Okay. Actually, yeah, it has. Let me show you. I remember why I did this now, okay? This is now, let me show you. This is now 1, 2, 3, 4, 5 coming down like this, easy. Okay, 1, 2, this is 3, 4, and 5. Okay, this is now A, B, C going upwards, A, B, and C, right? And then now, in my opinion, this is now 1, 2, 3, 4, 5 coming down. 1, 2, 3, 4, and 5. It's really hard to argue that, right? And then now that we've counted 5 in here, okay, let's just do this again so you guys are clear. Okay, let's actually take all of this out, okay? Let's go on it on a much higher time frame so it's much more distinguished as well, okay? So we're going to say this is 1, 2, 3, 4, and 5. This makes A, B, C, and now we go 1, 2, 3, 4, and 5 coming down, right? Makes sense? So now that we say that this is the final 1, 2, 3, 4, and 5 coming down, right? It's obviously attempting to make an impulse wave up there. That's why it moved up about 30%, okay? So now that it's retracing a fairly good amount, 1, 2, 3, 4, and 5, this is absolutely A, B, C going up, and then we get 1, 2, 3, 4, and 5, like that, okay? Now let's zoom in very, very close here, actually. So now we get an attempt to impulsively move upwards, right? We attempt to actually impulse up, but it's such a weak attempt, guys, right? Now that ABC has finished, okay, but because we have retraced by more than 100% of the wave 1 territory, we're going to expect further correction because the simplest ABC just simply failed already. And that's why we're still correcting in these particular zones. And the best way to look at this right now is to say that this right here is most likely the ABC, right? This is now the A, that is now the B, and this is 1, 2, 3, 4, and 5. So now we're waiting to see, since August, to see if this is actually going to be some sort of bullish pattern that's going to break out, right? Everybody is waiting to see right here. So this is basically the first wave going up, we would say, and this whole zone is now a consolidation. So the best thing that we can do to wait since August pretty much now, right? Because now that we've identified some wave failures, this is most likely a 1 going upwards, right? This is an ABC with an extended ABC in my opinion. In my opinion, keep in mind, everybody counts Elliott waves differently. Please remember that, okay? I believe that it's going to break out either down or either up, and we got to play it just like how we play all symmetric triangles like I've taught you guys in course number 1. Here's also a quick lesson on A, B, C, D, E triangles, okay? This is in May, back in iota. Let's go further back a little bit here so you guys can get a very good representation of it, okay? So this right here is obviously 1, 2, 3, right? Right here. 4 is there, and 1, 2, 3, 4, 5 to make the ending one right there in a flat. I think that was a flat. Yeah, there we go. Something like that almost. Right? Something like that in a flat. And then it breaks out to the upside when the upper barrier is actually pierced. So that's a good way to look at it as well. Sometimes you are going to get bull trapped regions. You always got to remember that, right? So just to give you guys a quick lesson as well. Not quick, but a good one. So let's say that this now is 1, 2, 3, 4, and 5. Well, that's making the first wave coming down, right? So we call this the first wave. Notice how these are subdividing into threes where it's making A, B, right? And this one's a higher high, C, 3. Okay, I'm going to actually zoom really close in so you guys can see, right? See right here? This is making A, B, okay, C, let me show you. A, okay, B, C, D, and E into like a squeeze for a triangle, right? Let's draw this so you guys understand this. Sometimes in the wave 2 or in wave 4, you can find an A, B, C, D, E. If you find an in wave 2, an A, B, C, usually wave 4 will be an A, B, C, D, E. If you find in wave 2 an A, B, C, D, E, then in wave 4 you'll find a zigzag A, B, C. Make sense? So you get something like that in here that's definitely squeezing in. If it's not something like that, right, you can consider some of these bull trapped regions because in a higher time frame, it'll just barely poke out, right? Does that make sense, guys? Something like that, right? It's touching pretty much every single point. So this region is a bull trapped region. We get a clear line. It doesn't look the prettiest, but that is absolutely an A, B, C, D, E, right? It goes A, B, C, D, E, and then it just breaks down. Makes sense so far, guys? That's how it would be for 1, 2, and coming down to make a 3, most likely there. And this is the A, B, C going up there, and then we get one more wave coming down. That's how I would absolutely do this over here. So just to give you more examples, for example, if we're on a 5-minute chart here for EOS, right, this would clearly be a 1, that's a 2, that's a 3, that's a 4, and that's a 5. And after 5, guys, always want to short, right? You take a fib range after that, you try to go for the golden pocket range. That's why every time we get to this golden pocket range, we're actually getting a reaction, right? We get a reaction here every time. And that's why we're going to see if we're going to hold there or if we're going to break down right now. But after this 5 wave forms, we're basically just waiting, guys. It's going to be just a game of patience to see what this structure is going to do. It's very difficult for me right now to teach more about Elliott wave because I got to be able to incorporate RSI, MACD, and a lot of other theories, which we haven't learned how to incorporate into here quite yet. So let's give you guys a clear-cut example. This one is very prominent in my mind simply because it was one of the times where everybody was on the fence about if this was an impulse wave failure or not. And it actually ended up becoming an impulse wave failure where Bitcoin simply just could not get higher than that. And then it ended up becoming just kind of a failed wave in my opinion. So we see here that this is the 5th wave where it goes 1, 2, right? And then this is we see this as a 3rd wave, 4, and a dinky little 5, where it's making basically an ending 5th wave diagonal because it is in the 5th wave. So take a look at this pattern very clearly, okay? You will be able to see these patterns all the time. Every time you see these patterns where the price is going up, right? You see the price is going up, it's a great time to be actually shorting the market. But what you'll notice is that the RSI does not get higher, just to add a little bit to this. So every time you see the RSI getting higher, or sorry, getting not higher, right? It's getting lower, but you see the price getting higher, that is your key reason to enter a short position when you add it into Elliott wave. So this is a prime example of how to be shorting the market, just as an example for you guys to see. I didn't want to make this entirely an Elliott wave course like I've stated. I wanted to make this a course to let you guys know how I trade based off of Elliott wave combined with many other factors as well, such as RSI, MACD, price action, level 2, histogram, and more. There's so many different ways to trade, and once again, it really depends on how we see the market. Think of considering to enter a trade, or every time you enter a trade, you want to find a key list of ingredients that will make up a successful trade, right? You don't want to trade solely based off of just Elliott wave. That's a disaster, to be quite honest. You don't want to trade only off of price action or only specialize in one thing. You need to have a variety of different skills. And once you have a variety of different skills, they can be used at different times. So I wanted to explain to you guys what WXYZ corrections were. I want to explain to you guys what ending 5th wave diagonals, leading 1st wave diagonals, just failures in general, and more about corrective patterns in this specific lesson right here for lesson number, we're on number 8 right now. And you guys are going to see me integrate Elliott wave theory into lesson 11. And you guys are also going to see lots of Elliott wave trades based off of lesson 14 as well. So anyways, thank you very much for joining me for lesson number 8. I'm trying my best to keep it within 45 minutes to an hour. These are fairly intense topics to be covering. So once again, thank you very much for joining me, and please consider joining the support group if you guys have any questions. That will run from November the 2nd to the end of February. So February 28th, 4 months of peer support for $200. We have one-on-ones, not a bad deal. See you guys there, and see you for lesson number 9, where I talk about the scalping strategy. Bye now.